So good afternoon, everyone. Thank you all for joining us and just giving it a few moments for others to come in. I can see lots of familiar faces as always in there, which is lovely. And of course, new ones, which is always a good sign as well. So do appreciate that. Thank you very much. So let's just give it a couple of moments. Can I just check though with you? Can you hear me? Can you hear me, see the screen? Just give me a wave or a thumbs up if you would. Thank you, Louisa. I can see you give me a thumbs up there.
I can hear you, Lynn. Good afternoon.
Perfect. Thank you very much. That's lovely. Thank you. So it's just if you can bear with me a few minutes, just going to give it a couple of moments more. Lots more people just joining us here. Okay. Okay, so just to let you all know, we are going to run a Q&A session at the end. So please do add your questions into the chat as we go along, so that you don't forget them. We will keep the webinar, as always, to a maximum of an hour and a half. So any questions not answered in that time will be answered after the webinar. And it would also be really helpful to me if you could just stay in the chat whether your question is for Dale or Raj. So I think we've got a number of people in here at the moment. There's always people that join as we go, which is fine. So I'm just going to get started and jump straight into it. So welcome to this Fabrik Invest webinar, and thank you each and every one of you for joining us. The topic of this webinar is Spotlight on Manchester and Short-Term Lets. We will be shining the spotlight on the Manchester property market, showing you how to invest into short-term let accommodation, how to implement a fully managed rental strategy that can more than double your traditional rental yields, and why this area is a property investment hotspot. Also, Dale will be speaking about Fabrik Invest and what sets us apart from the rest. For those of you who don't know me, my name is Lynn Whittingham, and I'm delighted as always to be asked to host the webinars for Fabrik Property Group. And of course, for everyone who stays until the end of the webinar, as always, we're giving away a free gift. So please do stop until the end for the opportunity to claim this. So without further ado, it gives me huge pleasure to introduce to you today from Fabrik Invest, the Managing Director, Mr. Dale Anderson, and from my property host, the founder and CEO, Mr. Raj Patel. As always, you will be given extreme value from these gentlemen this evening. So Dale, I'm just going to start with you, if I may. Dale has over 15 years of experience in the property investment industry and is a hugely trusted figure and well known for his honesty, integrity, and professionalism. Dale has previously led and managed a team that sold 5,000 units and raised over £1 billion. Dale has experienced both the positive and the negative sides of property and certainly remembers the last property crash and how investors benefited from that. Dale's expert insights into the property investment market mean he's often featured in the media. As well as property news and magazines, Dale has also been interviewed by The Times, the BBC, the Daily Telegraph, just to name but a few. And it gives me huge pleasure this evening to also introduce to you Mr. Raj Patel. Raj is a former partner at a top 100 UK law firm. Raj went on to establish My Property Host in 2014, and they are a UK market leader in short-term rental operations with over 4,000 rooms across the UK. They are leaders in the market when it comes to working with sales agents and new build properties. My Property Hosts are also featured in many media publications, such as the Sunday Times, the Daily Telegraph, the Independent, and the Evening Standard. So Dale, if I may, I'll hand over to you now to present to us.
Thank you very much, Lynn. As always, a very warm welcome to our guests. Thanks for joining us this afternoon. And yeah, today we're going to put the spotlight on Manchester and short-term lets. I wanted to mention during this series of the webinar a little bit more about the company, because we often talk about, obviously myself and what we do in terms of fully managed buy-to-let, but we're more just than that. We do offer a fully comprehensive service. What sets us apart from the other companies out there is we do thoroughly look at the due diligence of the properties. We make sure they're all asset backed, so you're not getting like a shared investment or fractional. You own the property outright, normally on a 250-year leasehold title deed. And location, we do a lot of market research and due diligence on different areas and locations. I work quite closely with day in, day out, just reading the news and constantly taking in content and researching the market. So with that, we also provide a lot of free resources such as our webinars, the property guides and the market research, just to help investors make better educated decisions. All of our developers, me and the CEO, Steve Jacob, we're very passionate about quality of the build. So we will look at the property investment opportunities in terms of, are the builds sustainable? Are they using new methods of construction, carbon efficiency? But most importantly, developers' track record to deliver on their promises as well. Of course, for a lot of our investors, they're planning on either retirement or meeting their financial goals. So they want something. Most of our investors, that run small businesses, doctors, lawyers, professionals, high up executives in companies, all the way down to the novice investor who's just started out and saved the deposit to get started. So for us, what's important is to make sure the properties do have management available. We have a team of in-house customer support staff who deal with not only the purchase progress up to exchange, but the actual after sales. So what I found was lacking in the industry was aftercare, actually having people to go to who are constantly looking at the property for you, going and inspecting the property for you, making sure there's good quality tenants in the property, doing reference checks, things like that. So we really have a full cycle approach to investment, and integrity and ethics are standard with our products that we choose. So we've got a team of property experts, most of our senior consultants, because another issue I had with the industry was a lot of young people coming in and getting guys giving professional advice to investors, and a lot of these consultants may not have much experience in property. So for me, what's very important and what sets us apart is only employing people who have experience in investing in property themselves, people who are passionate about investing in property, and people who have at least a minimum of 10 years experience in the property sector. The directors, myself, Matt and Steve, we've all built portfolios ourselves. So we've learned, we've made mistakes, we've bought new builds, we've also built older properties and refurbished them, from apartments to HMOs to short-term accommodation, even up in places like Blackpool. So we've been there ourselves and we've invested, and we've done well, but we've also made mistakes. In terms of insights, again, we like to provide a lot of research and education before the investors start to look at the property. So things like the location guides, the webinars, and the social media content. If you're not on our YouTube or our Facebook, please do go add yourself to the groups, because there's some really good daily content that our market researchers put out there. Again, fully comprehensive service, and we are also members of the UK Ombudsman. So we are regulated by the Ombudsman and the Office of Fair Trading Standards. What that means to investors is we've got professional indemnity cover, and the Ombudsman are there as a redress scheme if you do have any complaints or any claims against companies. It's important to make sure that they are members of the Ombudsman and of the Office of Fair Trading Standards. Don't take our word for it. If you go check out our Trustpilot reviews, we've got over 60 reviews on there now. Majority are positive. And again, it's just at the end of the day, we're online. We've got a great online presence, but most importantly, we want our clients to have a good experience from the process of buying to the process of actually completing, getting tenants in the property and getting returns paid. Partners, again, it's not about Fabrik ourselves, who we are, it's also who we partner with. We work with some of the top law firms that work in property. Lewis Denley Solicitors, JMW. We've also got, we work with a company called Get Ground who can help set up limited companies at a very cost-effective rate. So we had them on as guests last time. And we also had some of our mortgage brokers on the last webinar. So we can arrange mortgage advice. We can arrange setting up limited companies for buying property. And we work with the likes of Savills, who do like our cost monitoring and project monitoring for some of the schemes that we have up in Manchester and other areas. Again, Ombudsman, RCO, and Trading Standards, we're all members of them. And then we've got FX partners for investors who are overseas that need to do a transfer at a cost-effective rate. So enough about us. I just wanted to give a bit of a background on Fabrik and the services that we offer and the people that we partner with in the industry. So we want to build long-term relationships, and for us, reputation is everything. Yeah, so if there's any of those services required, let us know. I'll pass over to you, Raj. Thanks for being our guest today. Obviously, short-term lets has been something I've been quite passionate about the last year or two, and my property host connected with us and was recommended to us because we started getting a lot of inquiries on short-term lets. So if you just want to give us a bit of an introduction, Raj, to the company and how you came from working for a law firm to, becoming the founder of My Property Host.
Yeah, absolutely. And thank you, Dale, and thank you, Lynn, for the kind introduction. Apologies, everyone. I seem to be in zebra mode at the moment. It's the day that the sun is out, so apologies for that. So as you said, I started my career as a lawyer, and I was in fact the first client of My Property Host, and my co-founder and I founded the business in 2014 to start off looking after my own property. It was the new kid on the block, short-term rentals at the time, the popularization through predominantly Airbnb, but subsequently, much larger players like Booking.com, and in due course, some of the hotel groups like the Accor Hotel Group and indeed Marriott have come into the space. So it is a very large, fast-growing space. It being a nascent industry, there are of course it's still maturing, and the benefits that we bring is very much a professional element to it. The qualities that I personally brought from working in a law firm and a top 100 UK law firm, similar in ilk to some of the ones that you mentioned on the previous slide. I was a partner at a firm called Mitchell Moores, very similar to the likes of JMW. It's bringing that level of professionalism to the short-term rentals world, which is not always present, as you'll find in a new industry. So what is it exactly that we do? We rent out properties on a much shorter basis than traditional rentals. So I'm going to give you two views, very high level. One is the pre-COVID view, and one is the current view. And the pre-COVID view is that we were on average, our average length of booking pre-COVID was 4.4, 4.5 days. Obviously today it's much longer. We're finding that people are staying for longer periods. That will change. It'll go back to what it was, or very close to. And the type of traveller that we're attracting is as you point out here, business travellers, but also tourism. The kind of accommodation that we offer is ideal for families, and it's ideal for groups that are travelling, because that's where the bigger savings are for short-term rentals. I mean, one of the major benefits, wrong choice of words there, but one of the major upshots of COVID. I don't think there are any benefits, but one of the major upshots of COVID is that people want to be in secure environments. They want to be in self-contained environments. Hotels have, they have in-house catering. They have, you have room service. You have in-house restaurants. However, they're all very public. And what we say is the ability, to have that privacy, to be able to stay within their apartments when they're traveling. that's also a massive cost point. It's a cost saving. When you're having your coffee and your breakfast in your room, you're saving considerable amounts if you're staying for a month somewhere. So what differentiates us? As I said, we're coming from the professional side of the industry. We want to make sure that the customers are buying a full service. So some of the industry players won't include insurance within your fee. We've said, look, we're not negotiating on that. Insurance is included within our fee, and that's specialist short-term rentals insurance. The incidence of damage are limited with our method of management because we meet guests in person, check their government-issued ID, and buck the trend. We're not the technology-led kind of everything's automated. So you've got a lovely person walking in and using a phone to check in. Because from a security and safety perspective, and again that's a hark back to my legal days, you've got to make sure that the person that's booked the property is the person that's entering the property, and the only surefire way of doing that is to check the IDs of the individual entering and making sure that matches up with the booking information. You can't shortcut that, and we will want to shortcut that when it's coming to clients' well-earned money and their well-earned investments.
Gotcha.
Because of that, damage is limited. However, sometimes guests come in and they might be having a glass of red wine that spills on a carpet. What can you do? Insurance is therefore key. Because of this way of working, we're one of a handful of partners of the Marriott International Hotel Group. They work with a few operators across the UK, handpick, make sure that the operations are robust and in line with their own very high levels of management. We're on the other traditional platforms, Airbnb, HomeAway, Booking.com, Expedia, and we've got a couple of corporate booking channels who we also work with, and again those work with selected operators only. You can't access them within Elite. So if you just anybody setting up an operational a short-term rentals operation won't be able to work with those operators because they need to see a track record of good management.
Gotcha. Okay, brilliant. And yeah, go on. How have you found, just a quick question, obviously there's been COVID and there's no doubt it was a real disaster for the hotel industry and travel and accommodation lets. How are things now, obviously with the vaccine being rolled out and things getting back to normal? Are you finding that business is starting to get back to normal, or has the current occupations on the properties and so forth?
Yeah, I mean, look, Dale, the short-term rentals industry is very robust. We've recovered at a faster rate than the hotels industry, and we didn't quite suffer as bad as the hotel industry because the type of property we're looking at or we're managing rather, is it's a home.
Yeah.
So, it's not just a travel product. You do have part of the market which needs a replacement home for a while. So if you're getting your if you're getting your kitchen redone in February 2020 and suddenly COVID hits, you can't go and move into a hotel while you haven't got the facilities in your home. You have to go to another home. You need to have home is far more than a hotel room. So we've been bolstered by that. That people are obviously staying for a lot longer as a result. The people were previously traveling for 2 days, 3 days, especially major metropolitan areas like Manchester, London, Birmingham, Liverpool. People were traveling for 2 days, 3 days, shorter business trips. That market has slowed down somewhat at the moment. Or previously had done. We're now seeing a resurgence of that, and we expect that to continue. There is somewhat uncertainty still in terms of urban locations, but as soon as business travel picks up, which is traditionally September, nobody's doing any business in July and August. Everyone's still focused on summer holidays. So there'll be another pickup in September, but the signs are positive that it's going to be very similar to what it was before.
Definitely. And I think you make a good point. I think a lot of people will be thinking differently now. If they go, say, on a business trip up to Liverpool or Manchester, are they going to stay in a hotel full of people, or they're going to rent an apartment where they've got a bit of space, and privacy, I guess. So with that in mind, and people being a lot more cautious now, the way the world's going, I would guess that renting an apartment may actually be a better option than staying in a hotel moving forward. So,
no, that's absolutely correct. And there's a lot of commentary around what the new world will hold in terms of travel, and it's not really the new world; it's kind of the medium term looking forward. And there's a common wisdom that actually people will be staying in places for longer. So where you might have people working more remotely, the likes of Zoom and various other remote working methodologies have made it possible for that kind of work. What they will actually be, what people are missing from that is team bonding, and so people are more likely to spend a week or 2 weeks in a central office and then be able to work remotely for the rest of the month. And when they're doing that, they'll need a short-term rental place to stay.
Gotcha. Okay, brilliant. So it's all looking quite positive on that front. So I was going to now talk about Manchester today. We're doing a bit of a focus on the Manchester market. I did get some figures from yourself that we'll go through on one of our projects later on, Raj, regarding short-term let strategies on a project in Manchester. But yeah, just a quick snapshot. We've been talking about Manchester for quite a while now. The last several years, we've seen some very good price growth in the housing market. In particular, Deansgate, Greengate, City Centre, there's been a huge amount of regeneration. So what's driving the market in Manchester at the moment, and what for me is sort of continuing to push prices up. I mean, I've just read an article in the BBC today that Manchester prices of northwest is rising faster than the south, and so it's witnessing this year alone up to about 10% price growth. So unlike what a lot of people in the Bank of England were predicting, where they were saying prices after the stamp duty holiday were going to slow down, it seems that the housing market is still, due to a lack of supply and people changing their requirements of where they're living or staying or what they're renting, there still seems to be a lot of activity in the market. So Manchester's definitely probably our most popular location at the moment. We are seeing the highest sales growth and the highest volume of sales this year. Savills are projecting, we've covered this before, 28% capital growth in the northwest over the next 5 years. And according to Knight Frank, it is one of the top cities for rental growth, as well as JLL recent forecasts. We've got these reports, we can share them, and this just supports the numbers on Manchester. So 28% growth over the next 5 years, 5.6% rate at which house prices rose in the last 12 months. And this has been driven by a growth in the population as well. There's a boom in the actual population. Let me just put it on full screen again. There we go. Can you see that there? That's fine. So yeah, so basically what's driving this, there's 6 factors really. The economic boom, they expected to expand by 96% post-COVID, reaching 75 billion GVA, so the second fastest growing economy outside of London. I guess a lot of people are also now starting to think, well, do we need to run a business in London? We could run it in Manchester and rent premises and rent a property for a lot cheaper. We can get more value for money if we look at areas outside of the city centre as well. Education, we've got some of the leading educational institutions. There's not one but 3 major universities. The University of Manchester ranked 5th in the UK. What drives a investment location and price growth, demand and supply? You've got a home to 2.8 million people. That's forecast to grow by 250,000 to 2037. So a lot of people moving in. The city seems to be growing. Whilst there is a lot of construction and development, there still is a supply issue with regards to building enough property. What I'd say, I have seen a lot of property and new developments in the city centre, but where we're seeing the highest demand is areas like Salford and the Media City, and that's partly because of regeneration. There's the £550 million Media City being developed, and there's also the £3 billion University and Crescent Master Plan. Not only that, but you've got the HS2, which will ensure by that 2033 London's reachable within an hour. So connectivity and supply, again, 11,000 new homes under construction, but the government targets to deliver 32,000 new homes by 2025. So on to focused areas. Today I wanted to discuss Media City. We have a development called Michigan Towers, which we launched a couple months ago. Really nice development, and we'll go into more details on that in a minute. But the reason we like the Media City, number one, there's the LMP Peel Group, which is a massive company that does regeneration, and they were responsible for completely transforming the Media City. It's now home to the BBC and a number of tech and media companies. So it's a really nice part of the city, but it's very easily commutable into the city centre. Your 10-minute commute into Manchester. Again, more affordable prices. A lot of people are being priced out of the city centre now. And Manchester, you can pick up a property, Media City, you can pick up a property for about £150 cheaper per square foot. And it makes perfect sense for commuters because they've got all the amenities on their doorstep, but they can get on the tram and they're at Deansgate or Manchester City Centre within 10 minutes. So they're in the midst of a 20-year regeneration plan, Salford Central, and you've got 80 of the top 100 UK companies have offices in Manchester. So in terms of Salford, this is what it was looking like before the Peel Group got involved with the Media City. So it was literally just an empty site, and you can see on the right, that's the new Media City phase 1, and then phase 2, which forms part of Michigan, just to the right, will be a development of 375 apartments in Tower 1 with a number of amenities on site. So a really exciting part of the city, priced well, rents are more affordable, which are driving tenants to the area. We're looking at sort of 98% occupancy rates there. So this is just wanted to give you a difference on short-term lets options versus long-term lets. Michigan Tower, which is in the heart of the Media City Centre, which we recently released. We've got 375 apartments in total. And the development also hosts a number of amenities, such as a gym. It's award-winning developer as well. Let me just put full screen mode on there. So you get a 999-year leasehold, which is quite unique. Most leases normally come with about 250 or 125 years. The developer also gives a 6% net rental assurance. So on a long-term let, you're probably looking at a gross yield of around 7 or 8, 5%, 6% net, where short-term lets you can actually achieve, in many cases, depending on occupancy, of course, and market conditions, a lot more. But Michigan is for long-term lets, and that will be designed for business professionals working in the city. Prices start from £175,000. We've got 2 bedrooms from £260,000. An award-winning developer. Completion will be in Q2 of 2023, I believe, or end of 2023. But great modern development. It's sort of going to reach the skyline of Media City. You have some really fantastic views of the city centre, and also the quayside as well. So a thriving community, great facilities, bars, restaurants on your doorstep. So that's off plan, under construction, with a 2 to 3 year build. It'll have a gym, cinema room, courtyard gardens, very modern facilities, and we are currently offering some discounts on that. So you can get in touch with your consultant to discuss what's currently available. That's the location. So when we talk about investments, we make sure that we're in a good area. Media City, you can get on the tram and you will be in Deansgate High Street and the city centre within 10 to 12 minutes. You've also got all the new shopping and all the new regeneration that you're going to benefit from in Media City. So really modern, really young part of the city, and great for tenants and great for yield. Because city centre, you're going to probably get about 4% yield at the moment because prices have just gone up quite a lot. whereas Media City, you can still pick up a pretty good price, and that means your net yield is going to be slightly higher than the city centre. So short-term lets, we'll jump back onto short-term lets. The next project will be Albion Place, which is actually approved for short-term lets. There's obviously a few things to discuss regarding the market. We've been doing a lot of research on the sector. While COVID-19's obviously impacted the wider hotel industry, we are seeing a boom in the serviced accommodation market. And as you mentioned earlier, it's a very resilient sector. So what would you say, Raj, in terms of short-term lets, what areas around the UK are doing well? And which cities do you feel like in Manchester, for example, where do you see the market going in Manchester as far as short-term lets are concerned?
Yes, thanks, Dale. Manchester's doing fantastically for short-term rentals. Generally, we are the further up, the further north you're getting, the better the yield. Generally, partly dictated by house prices and the value of the property. But Manchester itself is I mean, it's got two great major benefits. One is the business. You've already spoken about that. It's a major business hub. Secondly, is the tourism aspect. There is a lot of tourism that happens in Manchester over, for example, let's say Birmingham. There's more people that go for tourism, leisure tourism, that is, to Manchester than for example, Birmingham. So it's got two very popular sides to it. Places like obviously Salford itself is fantastic because, and you can see that on the other side as well with places like Ancoats. You know, it's kind of spreading. The city centre is spreading, and it is actually a genuine spread of the city centre. And you know, places like Media City, they have such a great vibe to them, and such a big infrastructure that the developments that are now coming up are in fact a corridor between Spinningfields, let's say, and Salford. So it's a great place to be, and there's major savings. I mean, you know, the forecast that I've given you that we'll discuss shortly in a bit more detail was £77 a night for based on £77 a night for a one-bedroom apartment. Now, if you're comparing that to you know, central, where it's close to £100, it's a big saving. Big saving, and you're only a little bit further out. You know, things like parking are a little bit easier at the moment, especially public transport is not in favour. So parking is a little bit more in favour. You're going to get much more parking opportunities in places like Salford, and then, you know, it's just a short skip into town.
Excellent.
So it's those are the major benefits. In terms of the short-term rentals market, I think, well, one thing operationally that I should have mentioned perhaps before, but I'll mention it now, is that you know, the major difference between short-term rentals and AST investment is it's in the perception, both operationally and financially. I mean, financially, for a moment, we're generally speaking, we're making between 50 and 100% more than we would do on a normal AST investment. That's kind of the benchmark. Now that changes depending on the development, or may change, but generally speaking, net, once all costs have been taken into account, it's 50 to 100% higher. Wow. Okay. The conceptual issue, though, for a traditional real estate investor is that it's not a fixed return. And that is something that is a psychological point which needs to be overcome. But generally speaking, over the course of a year, the returns are much higher. Now, operationally too, you know, occasionally clients might think that it's a little bit more difficult to manage, and that's where we come in. There is a little bit more work at the outset, and that little bit more work is that you know, certain bills. Certain elements of the running of the short-term rental are assumed by the by the owner, the investor, whereas in an AST model, they're not. They're assumed by the tenant. But we make that process, and our job is to make that process streamlined. Many of our clients are based outside of the UK, so we have to be able to provide an entirely streamlined service. As you referred to earlier, we are, we're I think it's fair to say that we are leaders in the field when it comes to working in new build developments for individual investors and with sales agents. And therefore, we've come up with a process where we're taking charge of that entire process and making it as close as possible to the AST process in terms of streamlining and management. So there's a little bit of input required at the beginning, and that's with setting the builds up. These days, it doesn't take much to set up an account with an electricity, Wi-Fi provider, a water utilities provider. It's not overly cumbersome, and it's work that has to be done at the beginning. It's a couple of hours, and then it's down to us. We're the guys on the ground, reporting every month and making sure we're on top of all of the
brilliant
maintenance or any other issues.
Yeah. So really, to summarize, you can take your long-term lets and get your 5% yield. So in some cases, assured for 2 years at 6% net, which is great, gives you a bit of comfort. But the reality is, if you look at the market from a demand perspective and your numbers, okay, occupancy rates in Manchester are between 70 and 80% for short-term lets. I know that Raj and my property host can get me £75 a night. These are my expenses. This enables me to achieve almost double what I would achieve on a normal long-term let. So instead of giving 5%, I'm now getting 10% net yield. So it might not be assured, but you are kind of speculating on the short-term market to a degree. But I think if you do your due diligence and your homework, you should kind of know what you're going to be getting as a bottom line figure after your expenses. Is that right? So you'd say almost in some cases double or 50% more on the yield than what you would typically receive on a long term, right?
That's right. It's between 50 and 100% traditionally, typically.
Okay. Excellent.
Yeah, and you're quite right. If you're looking for validation on short-term rentals, I mean, even despite there being a number of short-term rentals coming up in Manchester and being available for offer, it is tiny when compared to the number of hotel rooms, and that's the market that we're competing with. It's the number of hotel rooms.
Gotcha.
And guests desire to stay in short-term rentals as opposed to hotels.
Gotcha. Excellent. So massive market. According to some research we've done, UK families spend 20 billion a year on accommodation services. 10% of household budgets go on accommodation, short-term accommodation services. So it just depends how many holidays you take a year or how many business trips you do. But I can imagine from a corporate perspective, you've got companies that pay for these accommodations on the weekends and stuff, and they'll just book them out, and the companies are paying for it anyway, which is great. So average occupancy that I've seen, my understanding, Liverpool city centre, Manchester, pre-COVID, we were looking anywhere between 70 to 80%. Is that about right from your experience?
Yeah, our benchmark is 80%.
Okay.
2020 we did 72. 2020, and that's because of COVID. And actually the reason why it was actually 72 and not closer to 80% is actually because of the initial period when we were adjusting. It slightly took us by surprise. There was a period of adjustment. Were it not for that, it would have still been closer to 80%.
Consistent.
Yeah.
Great. I mean, those are good occupancy rates, and certainly gives me confidence. Because if you look at some areas, if the thing with short-term lets, what you need to be careful of is that you're not in an area where occupancy is going to be like lower than 50%, and all of a sudden your running costs are higher than what your actual income is. So I think cities like Manchester and Liverpool, you're going to have that consistent occupancy there in the short-term market. Great. Okay, so we'll move on to the next one. Just a bit of a checklist that I've put together. So there's a few things for short-term lets. Number one is obviously check the location, as I mentioned, check the market rates. We use My Property Host. We'll tell them about the site and the address of the building, the makeup of the building. They'll come back to us and tell us, okay, these are the type of occupancy rates you can expect. these are the rental rates and these are what your operational fees are going to be. So from there, we can work out what your yield position is going to be. Demographics, what type of tenants? So again, demand and supply, what's driving the market? Is it corporate? Is it tourism? Is it business professionals, or is it people just family looking for a seaside holiday? So these are all factors to consider, which are going to drive the short-term let. Permissions, that was actually just meant to say permissions, not planning permissions, but effectively you just need to check with the developer or the management company if they do allow short-term lets, because in some cases they don't. Obviously, some people don't want to be renting out to certain tenants. I know my property host tends to avoid the sort of party type tenants, because I know you do get some developers doing short-term lets for like hen parties and stag parties, but with that you're getting a certain kind of tenant and damage to your property. So again, you just need to think what type of permissions are in place, who you can rent to and who you want to target. Letting management, again, just make sure you use a good company that can manage it for you, that does work with the likes of Airbnb and Booking.com and has the necessary licensing in place. And then just consider your cost management, your running expenses, because that's something I can imagine, Raj, from a cost management perspective. How do you manage that and make sure that your costs are managed and you're not things are not spiraling out of control? Could you tell us a bit more about the cost side of things?
Yeah, so most of the costs, Dale, are actually relate to the directly proportional to the revenue brought in. So other than the other than the fixed costs of the utilities and the Wi-Fi and the TV license and the council tax, everything else is done on a proportional basis. It's a percentage of what's generated.
Okay.
So that's how it's kept in check. I think just in relation to your previous couple of points in terms of letting management and planning permission, that's absolutely critical. Sorry, it's not planning permission. It's the leaseholder's permission.
Yeah.
That's absolutely critical. I mean, as I said, this is a nascent industry, and people are, some operators are, encouraging stag parties and hen parties and all sorts of parties, and using automated check-in services. And that is, frankly, that's a nightmare. That's going to cause disruption in the building. It's going to cause things like the leaseholder to revoke any permissions, or potentially, if it's not written in the lease, they'll find ways of managing it. Because what you don't want to have, obviously, is a building which is overrun with kind of nuisance guests, while you've got long-term residents in there. So I'd say that is the key. When you're buying an investment for short-term rentals, to make sure that there's a proper safeguarding around in terms of who can operate the short-term rentals.
Gotcha. Okay, so you guys, with regards to short-term tenants, are you mentioned that you've got people who obviously look or keep an eye on the properties in terms of the types of tenants and if the properties are being looked after. Is that something you guys take care of everything basically?
Yes, it is. So the way that we operate is actually it's kind of a hybrid, and I think, again, fair to say that it's fairly unique in the market, in that we're taking the traditional short-term rentals model, which is where you have properties dotted all over a particular place. So one street here, one street there, and they're dotted all over. And then you've got the service department model, where you've got big companies that take over entire buildings and have a reception, have an in-house maintenance team, etc. It's a fully functioning, it's like a hotel, but it's a service department building. We're a hybrid of the two. We are short-term rentals because we're working in mixed blocks, but because we're working with the likes of you guys, we're able to take on a number of units in the same building, and therefore we're able to invest in a site manager. So we have an on-site presence that's there every day, to ensure that A, guests are having a good time, but B, also to make sure that there's no issues in terms of bad guests, and to oversee that in-person check-in.
Great. Yeah. Okay, that makes sense, because I like the idea of the auto check-ins, but like you say, it's really then lacking the personal touch and also monitoring and looking after the property, I guess. So yeah, that makes sense. Great. And then so we're going to move on to the next slide. Albion Place is a office to residential conversion. Really nice project. Obviously, there's been a rise in office to residential conversions, A, because of COVID, B, because of build costs. Build costs have gone up. So we're actually getting better purchasing prices on apartments where there are conversions of offices, simply because of the cost of build has gone up through the roof recently as a combination of Brexit and the supply chain. A number of contractors are now sort of looking at their costings and having to readjust, whereas the office to resi conversions, the main structure is already there, and the main material and steels and concrete and whatnot. So these ones start from £149,000. On short-term lets, we are looking at 10, 11, 12% yield, which, like you say, is almost double that of a standard let. You can invest from as little as 20% on exchange of contract, or £40,000, and then you could look at mortgaging, typically up to 70% loan to value. So there's finance available subject to status. It's approved. We've got the permission for short-term lets, and it's right next to the £2.5 billion regeneration in Salford. So a great area for short-term lets and also for future growth of the capital values. It is 75% sold out. We've got a handful of apartments remaining there, and it's a very experienced developer. They've got 30 plus years experience. The other benefit, it's going to be completing end of this year, and block 2, I think February or March next year. So it's quite imminent as well. You don't have to wait too long. So that's the location, just on the fringe of Media City and the access road into the city centre. Again, a very easily accessible location to commute into Spinningfields and the Manchester city centre by train or tram or car. And then, yeah, just wanted to run through how the numbers work. So this is basically on a short-term let on a one-bedroom apartment. Your initial required capital at 20% is £30,000. You would then need 10% at completion. If you were to take a 70% mortgage at completion, I've used an interest rate of 3.5%. There's also buying costs to be aware of, and a lot of companies don't mention this, but you need to factor in stamp duty. You need to factor in your legal fees at completion, and also your mortgage fees for setting up the mortgage. So all in cash in on the deal is £55,000, and that includes all your buying costs. Your gross rental based on a short-term let, and correct me if I'm wrong, Raj, you're quoting around £75 per night, and an 80% occupancy rate. Yeah. So we are looking at gross rentals of £1,800 per month. We then need to deduct your service charge, your management fee, and your ground rent at 0.1%. You've then got what you clarified earlier, your booking or platform fee, and then your annual council tax for Salford. I didn't realise it's quite expensive council tax in Salford, but that is a cost you would need to factor in. And then you've got a cash positive net rental return after you've factored in all your costs of 14.75%. So there's two things here. The art of leveraging. There's low borrowing rates at the moment. I know people getting really good interest rates at the moment. And then the other advantage is on the short-term let model, you're obviously increasing your return on your capital invested. Quick question on fees. Could you just tell us more about how your operational fees work, Raj, on the sort of monthly or annual basis?
Yeah, absolutely. So our fees are 18% plus VAT, Dale, and the other fees which are completely out of our hands are the booking platform fees. Here they're written as Airbnb, but there are of course other booking platforms. Now, in relation to the booking platform fees, they vary from platform to platform. Yeah. Some are dearer than others. However, within our software, our management software, we are able to gross up prices depending on the cost of the booking platform. So, it's essentially it's more expensive if the booking platform fees are higher on the platform.
Gotcha.
So the difference is mitigated to the guest, to the owner.
So you've got 18% management fee, and that covers the book, and then you've got your platform fee, which is getting it onto Airbnb or Booking.com, right? And that's something that can vary. We've got it down at 3.6% of the revenue, but it's a fairly variable cost. Is that what you're saying?
That's right. So it's that's a from figure, and then there's to give you an example, Booking.com charges 15%. Marriott charges 22% roughly. And then, so what our software does is that the same property, let's say that we've got let's just, for ease of figures, if we've got it listed at £100 on Airbnb, it'll be 115, give or take, on Booking.com, and it'll be 120, give or take, on Marriott.
Gotcha. So if we factor in, if we look at our gross rental, and then we take off all our very similar to like a hotel, really, because I've dealt with hotels in the past. Your operational expenses overall normally come up to about 50% of the total gross rental revenue. So yeah, whilst you've got a very healthy annual gross rental return, you do need to factor in obviously your ongoing running costs, and typically you would take around 50% or even slightly more, and that factors in all your outgoings. So if you're getting 22,000 less all your deductions plus deduction of your mortgage, you're left with £8,000 cash flow positive net rental return per annum, which is a good return. Plus then you've got your 5 years of capital growth. You've repaid your mortgage. Say for example you exit at year 5 based on about 5.5% growth, you're looking at a combined profit of 87,000, which is not bad in the current market. So obviously that's dependent on where prices go, and it can also depend on the nightly rates and your revenue, your RevPAR rates as well. But overall, so you're saying in Manchester you expect around, so it's 80% occupancy per annum is your target. And then you're saying on a one bed, for example, £77 per night. Is that correct? That's correct. Gotcha. Okay. So your 80% times your £77, you're looking at £1,848 nightly rate revenue per unit per month on the one beds. Gotcha. Yeah. Okay. Brilliant. And then you just got to factor in your running costs, which is your service charge, your management fee, your ground rent, and then your obviously this booking platform fee you mentioned, your utilities and Wi-Fi, and the council taxes. Is that all the costs? Is there anything we've missed off, or anything you wanted to mention on the costs and the running fees? No, that's got pretty much everything. As you pointed out, the council tax in Salford is eye-watering, but I guess I thought that was wrong, and I checked it, and then it looks like it's correct. We got it off the council website, so that's your council tax in Salford. But yeah, we'd rather be transparent and just let clients know exactly what all the everything worst case what to expect, so they don't come back to us and say, well, oh, you didn't tell me about that cost or this cost. So some of the costs there might be less, like legal fees are sometimes covered. Stamp duty could be less depending on the current stamp duty rates, and whether you're a first-time buyer or you are a buy-to-let investor buying an additional buy-to-let property. So it can vary depending on the price bracket as well. But yeah, we just wanted to give investors a full breakdown of what you can expect, and that's something we can share with you. We've got the My Property Host figures, and then we've also put together the financials for Albion Place if you're interested in exploring the short-term lets. So great, yeah, that's pretty much sums it up. I'll hand it back over to you, Lynn, and yeah, thanks for your time, Raj. Thanks a lot.
Thank you, guys. Just, as always, I find these extremely informative, massive value, and very much appreciated. We do get great feedback from these webinars, definitely full of valued information. Thank you so much. So if you joined partway through, please don't worry, just a reminder, you will receive the recording via an email, so you'll be able to watch it back, anything that you've missed at all. I would, of course, like to invite you all to stay on. If you have any questions, please do put them in the chat directly to me, if you like, otherwise just in the general chat, and just let me know who these are directed to. So please do also remember that you'll have access to a free gift at the end of the Q&A. So I urge you all to stay on. And of course, there's always great benefits to be had from listening to other people's questions. So I've had a few messages actually saying, could you also have the slides? So yeah, no worries, we'll make a note of that and we'll get the slides out to you. So just to go through the questions, had a few come in so far. First one, guys, is what is the best ownership entity for property of this nature and the costs of setting up? I mean, I know we went through some costs there, but would you add anything to that at all?
Yeah, I mean, from my side, Lynn, a lot of our investors, as you know, they set up a limited company through GetGround. Initial setup fee, I think, is about £550. You then got to pay your annual fee to do your accounts. But what I do believe, and you know, we can put you in touch with a financial advisor or someone at GetGround to give you the best advice of the structure. But I do know that doing it that way with short-term lets, there are in some cases capital allowance, and you can also make deductions of your you know, mortgage tax relief, things like that. But in answer to your question, we've got professional advisors and tax specialists who can advise you on what the best structure is. Depends how many properties you're planning on buying. Have you bought before? You're buying 1 or 2 units. There can be tax benefits those buying through a limited company, and I understand with corporate lets there can sometimes be some tax relief as well.
Lovely, thank you. And also, what are typical deposit requirements and gearing options available to South Africans?
Good question for me, I guess. So yeah, we are getting mortgages for South Africans. The minimum borrowing seems to be at £100,000, which is around 2 million rand, or the rand's probably plummeting at the moment because there's a lot of trouble going on in South Africa. But in answer to your question, you can leverage up to 70%, and your typical mortgage rates you're getting through the brokers that we're using are anywhere from 3 up to 4%. Of course, it is subject to status, and that will be, you can choose obviously interest only or capital and repayments, but we are in a low borrowing environment at the moment. So it is a good time to borrow, but just be cautious that rates can fluctuate at some point, and it's very likely at some point the Bank of England is going to put interest rates up. But yeah, we are able to get mortgages for South African buyers.
Perfect, thank you. And I think another one actually for you, Dale, here is if you wanted to buy a 1-bedroom unit in Michigan Towers, is there any difference between buying through Fabrik Invest and another agency out there? Are there any discounts through Fabrik?
Of course. Yeah, so the way the developer works, the prices are direct. They treat most agents the same. In some cases, we have developments where we're more exclusive, but in others, there are other agents on the market. We won't be beaten on price. We have very strong relationships with the developers. I've known them for many years. So we'll, of course, assist you to get the best possible deal. But I think what you need to be looking at as well is, as I mentioned earlier, the ongoing services we offer. However, we will be offering from this webinar, anyone interested in Michigan Towers, anyone who's attended the webinar, we're going to throw in a bit of a special incentive if they're interested in buying in one of those projects. But yeah, we'll make sure no matter what happens, they get like the best possible price. And incentives such as legals or furniture packs thrown in case by case, obviously, just depends on the month and time of the year and what the developer is willing to offer. But yeah, we've got great relationships with our developer, and we also give you access in future to projects before they're even on the market. We'll, you know, introduce you to the product and make sure you get the best apartments with the best incentives.
Absolutely, without a doubt. Thank you. So just moving on to the next one. So actually for both of you here, out of the 2 buildings that you've mentioned in the presentation there, Dale, which of these 2 would you pick yourselves?
Again, it depends what you're looking for. I mean, if you're looking for something really sort of safe, secure, completing in a few months, commercial to residential conversion, well priced. And if you are considering short-term lets, then 100% I'd go for Albion Place. Great location, you know, Salford, very easily accessible to the city centre. However, if you want the comfort of a 2-year rental assurance and you prefer a luxury apartment which has a gym and a cinema and all the amenities on site, then obviously Michigan may appeal to a different type of customer. But for that one, you're going to have to wait. It's, you know, it's a 2 or 3 year construction time frame. So yeah, I mean, if you just want something standard, nothing too fancy, but it's going to give you a good return and you can capitalize on short term, I'd go for Albion Place. If you want to buy something that you're going to have to wait a bit and, you know, you are competing with another few hundred apartments within the blocks, then Michigan's definitely the one I'd look at. But really beautiful building and a developer there that has a very, very good track record.
Yeah, absolutely. I'd like to throw into that as well for anyone that's sitting there wondering, actually, when I first saw that development, my question was, you know, which tower is the cinema room going to go into? Because obviously if you're buying in Tower 1 and it goes into Tower 3, you don't really want to wait that long. But yeah, unbelievably, they're putting that in each of the towers. So you've got your gym and you've got your cinema room in each of those towers. So yeah, massive there. Raj, have you got anything to add to what your preference would be as to what Dale said there?
Well,
just putting you on the spot.
Speaking as a reformed lawyer who is by his very nature very conservative and risk averse, short-term rentals have definitely changed my investment profile. I, as I said, started off as the first client of the business, and I currently have 2 properties managed by my own firm and none under the AST model. I view them as I personally, and this is obviously my personal opinion, view short-term rentals as safer. You know, you don't have any non-paying tenant risk, nothing like that, because it's all paid in advance. The other risks, things like damage, are covered off by insurance in the unlikely event that they happen. So I'm a fully I'm
Albion Place in that case.
rentals.
I like this. It's a Michigan Towers long-term lets versus Albion Place short-term lets. Let's see who wins. So Albion's the winner for now, short-term lets. But both fantastic investments. It's dependent on what your strategy is, but we can certainly help you make the right decision. You know, if you want to have a chat or jump on a Zoom, we can take you through Google Earth and the projects and the different types of apartments with one of our consultants, and yeah, just guide you in the right direction.
Absolutely. Okay, so just moving on, what is the best way to sell after a period of time from a short-term let situation?
Raj, do you want to take that one?
Yeah, it's just a traditional sale. There's no difference. You continue with a normal sale. If it's an incoming investor they may look at the short-term rental income that's been generated over a period of years. However, that's not, in the current world, it's not bankable. So you won't be able to get a mortgage based on higher returns. However, you know, if you were running it as a short-term rental, you could show the historic income. That could be something that a potential buyer looked at.
Yeah, what I would say, if you're selling on to an investor, having an option of a short-term let could be quite appealing to them, because they know they're going to, because a lot of investors, what do they want? They want passive income, right? So if they can achieve a higher yield on a serviced apartment that's going to be managed by my property host, of course, that's going to become now more appealing to investors. But in answer to the question on exit strategy, what I like about serviced apartments is just still a normal apartment, right? It's just been managed and rented out in a specific way. So unlike a student room or a hotel room, which I've had experience with as well, those liquidity can be a bit of an issue, because selling a room in a hotel or a student property is typically just purely going to be driven by yield. Whereas an apartment is not just driven by yield. It could be a first-time buyer buying it to live in. It could be someone to buy it to rent it out, or someone to buying as a short-term let. So it just opens up the market, and it just means you can go to local estate agents, which there's hundreds of, and get them to sell it for a very minimal fee. So yeah, we tend to stick to residential apartments.
Lovely, thank you. So another question here: are the prices including fit out, i.e., short-term let ready? Including kitchen equipment, furniture, beds, etc.
Yeah, so with most of our developments, there will be an option to furnish them, and we would effectively. So with certain developments like Michigan, there are furniture packs available, and they will be suited for renting out as a serviced apartment. They're very good quality, and then in some cases we can offer different packages. So there might be like a silver or a premium package, depending on what level of furniture you want to put in, because naturally furniture can get damaged. So you want a bit of a warranty on that as well. But I'll be interested to find out your thoughts, Raj. Is it better to up-spec your furniture on short-term lets, or do you tend to go for a mid-range furniture pack on your properties?
Definitely up-spec it. And when we're talking about up-spec, we're not talking about necessarily investing in brand name appliances or anything like that. What we're talking about is adding a splash of color, adding some making sure that there is a art pack on the wall. It's basically making it eye-catching. With short-term rentals, the big difference between how short-term rentals are purchased versus ASTs is that with an AST, you'll hardly ever get someone renting it without going through a visit. In short-term rentals, no one visits. It's all done by photo. No one even reads what's written. It's pretty much entirely the photos. So the photos have to be the photos have to be of good quality, but they also have to show a good-looking apartment.
Absolutely, and it just goes back to the whole experience, because I mean, if I'm booking something on Airbnb or Booking.com, the first thing I'm going to do is look at the pictures, right? Look at the quality, and also check the reviews. So if the tenant doesn't have a good experience, or the property is not in a good standard, naturally that's not going to help you, is it, in getting repeat business? So I think that's very, very important to make sure that you've got a good spec furniture pack, and all our developments will normally come with a luxury furniture pack. Prices range anywhere from 3,000 for a one bed, up to sort of 5,000 or 6,000 for a two bed, and that covers pretty much everything that you're going to need for short-term let.
Perfect, thank you. And actually, the last question that we've got here, if anyone's got any more, please do add them in. What is the availability looking like at Albion Place and Michigan Towers at the moment, Dale?
Albion Place is it's been a very fast selling scheme. It completes soon, so we're 75% sold out. So I think we only have a handful of units available. Let me just check. I think we've got in Block B, I think there's about 10, 11 apartments or so. So there's still some good apartments available, a couple that have come back on the market, but yeah, you'd need to be pretty quick. Michigan Tower 1's 375 apartments. It's selling really, really well, but it is a new launch, so you can still choose from, you've got an opportunity to get in early and choose from some of the best apartments. And we're also offering some early investor incentives on that one as well.
Great. Okay, thank you. Another one in here. How is maintenance managed?
Yeah.
Should I take that
yep.
one?
Please go on.
So one of the benefits, obviously, of short-term of working in new builds is that maintenance is fairly limited, and there's usually a period of warranty where the contractor is actually based on site. So when anything, we have a very good relationship with the developers and freeholder to make sure that those we liaise directly with them to get anything any snags ironed out. and then moving forward, in the unlikely event there is anything, we will inform you. We will carry out the repairs up to a value of £250 using local contractors. Always trying to inform you beforehand, and then anything over £250, we will come and seek permission before doing so, unless we're told not to.
Okay, and just to follow on from that, if while you've got somebody actually staying in a short-term let, they get situations such as a dripping tap, shower not getting hot, etc., is there like a pack with a number that they can ring to get in contact with someone who will come out and sort that?
Yes, so they get an online pack as well as a house manual, and then we have a team. You know, we have a team that answers the phones. We have the site manager. So in the event that it happens between the hours of typically 12 and 7, the site manager will be on site and will be able to go and answer those questions in person. And it's obviously COVID makes this a bit different because people don't want to necessarily meet each other. But outside of those hours, it's done virtually, or it's requested that the site manager is able to go over and see them when they start their shift the following day.
Okay, thank you. And just going back to the question about do the prices include fitting out of the furniture, etc. I mean, basically the answer to that, the short version is no. And the property, you know, we can obtain furniture within that. But I think it's fair to say as well, Dale, that many of the properties that actually we have, we are offering discounts at the moment or incentives whereby the furniture comes part of the current purchase. Is that correct?
Correct. So basically on the Michigan Towers, there's a promotion, and anyone who's attended the webinar, we can extend that to where they get a furniture pack included in the price. So instead of paying £3,000 or £5,000, yeah, they're doing some nice early invest incentives for a limited time at the moment.
Great, thank you. And are there any further incentives if somebody wanted to buy more than one unit?
Really depends. I mean, our job at the end of the day is to make sure we get you the best possible deal. If you are looking to reserve in July, we could probably cover your legal fee or something. And then in terms of multiple units, like I said, we can have a conversation, put forward an offer, and then try and see if we can get obviously we're always going to push to get our clients the best possible deal, but certainly by taking advantage of some of the offers this month, we could save you up to about £10,000 on some of the projects like Michigan Towers.
Perfect, thank you very much. So I think that just about rounds up all the questions. If anyone has got any more, please do just put them on the chat, and I'll get one of the sales consultants to give you a ring to talk that through with you. And of course, you can always email us. So tonight, Dale, I assume, as always, you throw in extra free gifts here. So would you like to tell us all what that is, please?
Yeah, so we've just finished we've got our UK Manchester Property Investment Guide 2021. So we'll give that away as a free market report. And then we also offering consultation. Anyone who's attended the webinar, if you are interested in either one of those projects and you want to discuss what's available, there are incentives available to anyone who's attended the webinar, and your consultant will be able to tell you on a one-to-one consultation. You just let us know what time is good for you and what day, and we'll book in someone to give you a call.
Perfect, thank you. So I'm going to come back to those gifts in a moment, everyone, but I've got another question just pops up here. What is the benefit of using an agent for short-term lets rather than managing it yourself?
Raj, it's quite a simple answer for me. It depends on your strategy. If you want to manage it yourself, it's a lot of hassle. Yes, you might save yourself some costs, but I think the idea of having someone like my property host is, here's my apartment, get it rented out for me, and I don't have to worry about it. I've got a business to run. So yeah, it depends on the person.
I mean, there's a few points. Some of the platforms that we work on, we get a number of bookings on, will not allow non-professional owners on board. So Airbnb will, and that's one pretty big platform. But most of the others won't permit you to list your property unless you're a manager or have a volume of properties. That's number one. And of course, the more channels that you have, the higher your revenue. That's undoubtable. The second thing is that most check-ins, it's typical as Dale says, most check-ins take place between 3 and 7 p.m. So, if you've got a day job, getting there at, carrying out an in-person check-in at that time is going to be very tough indeed. And as I've said before, there's absolutely no way on earth that we as a business would compromise on having in-person check-ins. It is, in my view, an absolute recipe for disaster if you don't. And that's largely it. I mean, we it's the infrastructure. We play with the nightly rates. We change the nightly rates daily. These are the kind of things which boost you up the algorithms on the channels. In the thousands of properties that you have in Manchester, how do you get to the top? It's by making sure that you've got good reviews, yes, but it's also by making sure you're changing pricing. And that's part of the infrastructure that we offer.
Okay, thank you. And Raj, just a couple of things here. I've had a few people say, actually. So firstly, did you say the rate for managing is 18%? If you can just confirm that, please.
It is plus that.
Yeah, so, plus that, that's what I thought. And also, do you have a service pack that includes the costs, etc., for the maintenance and servicing?
We have our terms and conditions.
Right, okay. So would you be happy if, I've had a few people ask actually if we can give that to them. So is that something you're happy to supply?
Yes, absolutely. I'll be able to send it to you, Lynn, and then we can get that.
Okay, so what I'm going to ask people to do then is, if you would like, with regards to the free gifts, if you'd like the Manchester Property Guide for 2021, please just put guide in the chat now and we'll get that across to you. If you'd like a consultation with one of our sales team on either of these two products, or of course anything else that we can help you with, then please do put consultation in the chat. And if you'd like the service pack from Raj Patel and his team, just put service pack in the chat and we'll get that across to you as well. So, and finally, just really, if you've got any questions at all, please contact your dedicated property consultant at Fabrik. Each one of them has a minimum of 10 years experience in the property industry, and they'll be more than happy to jump on a call or Zoom with you and help you at all. So Dale and Raj, on behalf of everyone here, just a huge thank you for your time and valuable knowledge this evening. As always, very, very much appreciated. I think we've come to a natural end now. Keep your requests coming in the chat. We'll keep that open for a few more moments. And thanks again, everybody, for being with us today. It really is truly appreciated that you take the time out to be with us. So stay safe, stay well, until we see you next time. See you all again soon. Thank you.
Brilliant. Thanks a lot. Thanks, Lynn. Have a good evening. Thank you, everybody, for being here.